going on, folks? Hammy here with the Trading Initiative, and we're going to be going through some international heavy hitters. These are stocks that are domiciled outside of the United States, and unless you've been living under a rock, we know that international stocks right now are friggin' flying. They're not the most popular group of stocks to own, particularly because a lot of the options traders can't find liquidity. But listen, there's an incredible amount of opportunity right now in international. And if you can match that option availability with breakouts in this particular area of the market, I think you're going to find yourself in some awesome trades over the next 6 to 12 months. It all comes down to the dollar. We're going to start there really quick and then go through the actual report itself. As long as the dollar is falling, which it has been doing since the middle of January, I know this is at the behest of everybody that expected the dollar to absolutely rip. We're back in the penalty box, and international stocks have absolutely flourished under these types of conditions in the past, and they're doing so once again. It's just simple math. China and a bunch of other countries outside of the United States are actually outperforming U.S. stocks right now, and they have been for the last almost 3 months. And so there's an incredible amount of value here when you actually scan through this specific area of the market, right? So what we do is we look for above $10 billion in market cap. We want to get rid of a bunch of the lower market cap weighted stuff, and we want to focus on, we throw some volume and technical filters on top of it, filter it by proximity to 52-week highs, and we get a bunch of strong stocks that are domiciled outside of the United States. Once again, we want these names when they are outperforming against the American stocks, right? And right now they are. And this has not been the case for the last 10 or 15 years, but it is the case right now. Could it be the beginning of something bigger? Maybe, but this is where the relative strength and absolute strength is right now, so that's why I want to focus on it. So as you look through this list, I mean, there's a bunch of different types of stocks here, right? You have Chinese stocks, you have European stocks, you have outside of the European Union stocks, you have all different types of sectors, you have EV, biotech, you have financials that are coming in through Europe. Lots of different areas in the market right now are flying outside of the United States. And you know right now, specifically within the United States, we're having a lot of sector rotation under the surface, a lot of stagnation in some of the higher beta areas of the market, such as tech, for example. Consumer discretionary has pulled back quite a lot this year. And we're seeing a lot of outperformance in the defensive areas of the market. We're seeing the opposite in the international sphere. We're seeing lots of offensive-minded international stocks fly. So let's go through a couple of these. First one I want to go through, we've talked about this a couple times on stream over the last few weeks and months here, but XPEV is a name that we bought back in 1571. This is a Chinese EV-related name. It turned free for us today, meaning our options contracts were up and over 100%, so we closed half to lock in a free trade by removing all risk that we originally put into the trade, and then we actually hit our first profit target as well. So we paid ourselves a little bit off of this trade. So we have a small portion of XPEV still on the books. We want to keep that on the books and let it continue to work for us as long as it wants, right? These are how wins turn into bigger wins, by taking risk off into strength instead of just closing out the trade entirely at a predefined price target. That's not how we like to roll inside of TTI. So XPEV, number one name on the list, and as a matter of fact, up today, 15%. So big win for us. Once again, Chinese EV-related name. And we own a couple of these names already on the list. I wanted to point out XPEV in particular because China is a hot area of the market right now. BABA is flying. XPEV is flying. A couple other names are flying. If you feel like you missed the boat in Chinese-related trades, I'll tell you right now, you didn't. There's going to be plenty of opportunity over the next coming weeks and months to get long Chinese specific names. One name I'll just throw on your radar really quick that has not yet set up, but has a setup incoming is Billy. This is a stage 1 and 2 is stage 2. Above 28.5, we have path of least resistance higher with price targets of 40 and 60. We're going to be targeting that inside of TTI, so there's a free trade for you right now. Throw this on a watch list. If this closes above 28.5, there's a pretty good chance that it's going to continue to go higher as there's no overhead supply weighing it down. Just a very basic stage 1 into stage 2. Back to the international heavy hitters list. There's 3 stocks on this list that really pique my interest, and we're going to be talking about these inside of TTI as soon as this stream is over. The trade ideas will go out, but the 3 that we're going to be looking at first, Sony. So there's a lot of really good setups on this list, but they're not yet actionable. They've either already broken out, we're looking for pullbacks, or they're already just way too far gone and they're outperforming. And that's great if you own them. But if you're looking for exposure into the European areas, Sony has an opportunity for you, right? We're looking at this brand new breakout above 25.5. Give me 1 second. 25.5 is our line in the sand to get long more Sony if we don't already have it. And our price targets are up near 33.5. And what really makes this particular setup attractive is you don't need to have a very wide stop. It's a 1.52 ADR, which means that it's relatively not as volatile as some of the names that people like to trade. And so you can run a tighter stop and really juice up that risk to reward. This is something like a 4.5 or 5-to-1 risk to reward, the way that we're playing inside of TTI. And there's also an opportunity to own it from an option standpoint as well, right? There's options availability on this particular trade, and we like that, right? We like to buy particularly in low IV environments if there's enough liquidity or volume and the spreads aren't too nasty. Buy some calls in this type of situation. Your max loss is going to be the premium that you pay on these calls. But the best part is, in a low IV environment, if any implied volatility comes back into the name off of a breakout into multi-decade highs, by the way, last time Sony was here was all the way back at dot-com bubble, prior to it bursting back in 2000. So 25-year high Sony, if implied volatility starts to expand, your call options get paid two different ways. You get paid with the directional move in the underlying asset, and you get paid from the implied volatility expansion. That's kind of a 1-2 combo in a bull market. We really like that. So Sony is on our watch list right now. We like this trade above 25.5, targeting 33.5 in the relatively short term. We're looking out a couple of months here for this particular move. And then, like I said, depending on where you want to throw your stop there, this is a 4.5-to-1 risk to reward from a shares perspective as well. So it's worth looking at. The next one I want to talk through really quick is AON. This is an insurance-related broker. Now, this already broke out, but it pulled back and retested its previous breakout spot at 343. So this is a BRB setup. And this is something that's been on our scans for a while, but we never really pulled the trigger. Now that it's breaking back out into all-time highs, we're going to want to pull the trigger on this. This is a European, I believe, a European insurance broker. Where exactly is it from? Go all the way down here. It's an Irish insurance broker, and we like this above 397, 398. You can draw your line in the sand at 400 if you want. We like this up to the $500 area. Once again, it's a slower ADR, right? It's a less volatile name, so you can run a tighter stop on these and really juice the R to R. We like this for like a 7 or a 7.5 to 1 risk to reward, meaning for every dollar you're risking, there's an opportunity to make 7 at the first profit target. It's a nice setup here. It's already pulled back and retested its entire range high, which gives us the confidence that it wants to actually break out here and continue on up. Next price target up is $500. It's a fairly simple setup, trading north of its upward sloping 200 moving average, and it's trying to work on starting a bullish momentum regime here. So up into all-time highs, AON, worth an opportunity, or at the very minimum, a look. And then the last one I want to talk to from an actionable standpoint is Logitech. So Logitech had an immense run-up back in the dot-com bubble, or excuse me, back in not the dot-com, the COVID bubble, if you will, from 2020 all the way until the peak at the end of or middle of 2021. This thing absolutely rocketed from $50 all the way up to nearly $150. This was an absolutely huge winner. And then we got the markdown period, obviously the bear market, and then we got the stage 1 and 2 of potential stage 2. But why I like Logitech here is because we've done nothing for the last year. We've consolidated sideways. And finally, we're starting to look like we're breaking out, and this comes on the backside of this dollar weakness, right? So it all makes sense. Dollars coming down a little bit, international stocks are breaking out again, and Logitech is, I believe, an opportunity to be able to take this dollar weakness into higher highs from an international standpoint. I like risking the $100 level. It's a nice big round number. We're currently trading at 105, so if you want to wait for a pullback, that's totally fine as well. And we're running the fibs for price targets, 120 and 140 up at all-time highs. This is a bullish momentum regime, trading north of an upward sloping 200 moving average. My favorite part about this is even over $100, even though price has gone up and over $100 in the past, there's not a whole lot of volume up there, as evidenced by the VRVP. So while this is not all-time highs, it should trade relatively easily up towards the 120 and 140. There's not going to be a whole lot of bag holders there from the previous run up, and we can verify that with the VRVP telling us that there just wasn't a whole lot of volume up there. This is another one of those trades that does have an options component, which is once again what we like in these types of situations. It's a low IV. It's a relatively cheap play as well, and spreads are relatively tight. So Logitech going along with Sony, both of these not necessarily the same industry group, but relatively the same type of stock. Logitech making computer peripherals, and Sony is on the hardware side. Both of these looking like they want a new highs. Both of them coming from, obviously, the international heavy hitters list. And there's a lot more on this list that might not be actionable yet, but really paint the picture of how strong international equities have been. If we look at something like Ferrari race up at all-time highs, This has just been on an absolute ripper for the last couple of years. For everybody that's sitting there saying that the consumer is dead, maybe you're right, but Ferrari's at all-time highs, so take it for what it's worth. And then look at how many different types of European banks are on this list. I mean, this has been a thing for a long time. People have been crying about banks being exposed, that these things were going to cause some sort of catastrophic market meltdown, and they couldn't really be more wrong, actually, to be honest, at least as of right now. Deutsche Bank trading at 10-year highs right now out of a massive potential stage 1 and 2 stage 2. These are not bets that you want to normally take to the downside, right? These are massive moves. After spending 10 years trading sideways, Deutsche Bank is finally breaking out into an uptrend, riding its 200-day moving average. This is not something I would want to short. So if you're looking to get long international financial related stocks, which once again I've alluded to a couple different times, closed at all-time highs and continue to run into all-time highs right now. The narrative right now is that Europe is fucked. The narrative right now is that European banks are fucked, and yet the stock market continues to buy these things. So you can either, and we wrote a tweet about this earlier, you can either be right or you can make money. I don't care which one you prefer. I know which one I prefer, which is I would prefer to make money. I don't need to be right all of the time. Things like Deutsche Bank give us an opportunity to go against popular consensus, which if you're on Twitter or anything, is that European banks are fucked, European economies are screwed, and yet here we go, the market is buying these things. And once again, it's not just Deutsche Bank, right? You can point out, by the way, Deutsche Bank, isn't Germany in a technical recession or something right now, and yet it's still breaking out? Santander trading up into multi-year highs. These are not bearish moves. BBVA. Oops, let's use the NYSE, right? 11-year highs. I mean, this is not accidental. Look at how many stocks internationally coming out of the financial space are breaking out into new decade highs. Here we have HSBC. Anyway, you guys get where I'm going with this, right? There's a lot of different types of setups on this particular list. I'm going to give you one more that I see on this list that I actually skipped on accident. It's Medtronic. Medtronic, while it's not ready yet, I really like this setup. Healthcare is outperforming this year. If you're not aware, now you are. Healthcare is outperforming this year. There's not a whole lot of stocks in the healthcare space that are really attractive to buy here, but I think something like a Medtronic, which is an Irish medical specialties related name, has an opportunity, right? We have a very easy to read stage 1 and 2 is stage 2. It doesn't mean the trade's going to work 100% of the time, but it's very easy to know where you're right and where you're wrong. For me, path of least resistance higher is at 93. You get above 93 bucks, you're targeting 107.75, 108. Next stop up 131, 132. Plenty of options availability, and it's a pretty good trade from an equity standpoint as well. At just under 2%, you can run a tighter stop once again and really juice the R to R on these things. But I would wait until this thing actually breaks out. So once again, we have a wide array of different names. We have banks, we have consumer discretionary related names, we have healthcare related names, we have things like Ferrari breaking out. This doesn't feel like the beginning of a trend that fizzles out within the first week or two. And as a matter of fact, if you go and you actually look at the winners so far this year, the United States through the S&P 500 is a laggard, or one of the worst performing this year. There's a lot of different areas of the market right now that are breaking out, and if you are in agreement that primary trends matter and these stage cycles kind of give us an edge in where we are within market cycles, a lot of these things are breaking out after massive bases. I'm talking decades long bases. Generally speaking, these are secular breakouts that will last a very long time. So let me know what you think in the comments. Do you like these types of trades? Is international going to stick around? Is this potentially the beginning of a bigger move in international related stocks, particularly in relation to United States stocks, right? Or are we going to see a decade of outperformance? I don't think I'm ready to admit that, but there's something here. And the travesty would be if this thing does continue to work for the next 6 to 12 months, and then everybody starts hopping on, and you have no exposure, and now you're playing the catch-up game. Because I'll tell you something right now. It's not retail buying these stocks. It's not retail pushing Deutsche Bank into decade highs. It's not retail buying Santander and things like Sony. This is institutional accumulation pushing these things through. So by the time it gets on retail's radar, who knows where it's going to be. Okay, hope you guys like the stream here. My name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. Leave me a comment below. Let me know what your favorite international stocks are, or let me know if you think this is just a bunch of fugazi and it's going to roll back over. That's cool too. Catch you tonight at 3:45 p.m. Eastern Standard Time. We're going to be streaming for about 45 minutes until 4:30 p.m. Eastern Standard Time. The NVIDIA earnings. It should be fun. We're going to have a bunch of people commentating inside of the Discord, and you guys are going to be able to hear a live analysis of what's going on in the market. This is a big deal. I normally don't put any emphasis on earnings whatsoever, but NVIDIA is a big deal. All right, folks, I'll catch you tonight.